I want to talk about the Business Roundtable, but because of the chaos in the markets today, I'm hoping we can start there.
Yeah.
Markets down pretty substantially, and I just wonder what you think is happening. Is this a real situation? Is this a fear factor, or is this a factual factor that's driving stocks down?
It's a little of both. It's a confluence of two things. We still have a strong American economy. So if you speak to most of the CEOs, they say their order books are good, consumer balance sheets are good, the economy is growing, wages are going up, they're still hiring people, unemployment may very well hit 3.3% this year. That's all good. On the other side of it, you have a bunch of geopolitical stuff, oil, Brexit, but I think the one that's probably roiling the markets the most is trade. And the issue about trade is not just the direct effect, it's the indirect effect that how bad it's going to get, what can go wrong. And, of course, that fat tail of a trade war. If you weren't even thinking about that a year ago, now people are talking about how bad can it get. So that's why you see it's kind of swinging the market all over the place. And that, with the added thing, rates are going up, and is it recessionary? Now, I personally think the yield curve, it doesn't tell you that at all. But, that's the thought. There's something in the yield curve that's telling you might have a recession. So, but what we all see in the actual facts on the ground is you still have growth in America.
Well, that's a lot to...
And growth in the world. We just met with the IMF, 3.7% this year. I mean, that's among one of the better growth for the world, not this year, next year, 2019.
But the fear factor, the idea of the trade war, which would you call a trade war now? Because recently you said not.
It's still a trade skirmish, but people are pricing in how bad can it get. And, you have to, how bad can it get? So
when you say people are pricing it in, you're talking traders or you're talking CEOs who are trying to figure out what to do with their
a little of
future
each,
plan?
because you're having, a lot of people mention it being an issue. So it's a minor issue for most companies, but it's a big issue for some. And some companies, they have to change supply lines. They have to make investments differently. They may hold off on something because they need to know where to build the plant. Mexico, America, Vietnam, South Korea, China. And those things are just causing uncertainty, which causes volatility.
Are you hearing about specific companies that are pulling in plans, that are saying we're going to wait and see what happens?
A couple, yeah. But it's not, like I said, take 100 companies, it's 3, 4, 5. There's another 5 that'll tell you they're worried about it and they're thinking about it and it's affecting price a little bit. But the bulk will still tell you it doesn't affect them. So, but it's the uncertainty. When you create uncertainty like this and, with potential tariffs and doubling down in 90-day timelines, you're going to get a little bit of roiled markets.
Traders and investors overall seem to feel a little better about things, at least on Monday for a few hours after we got out of the G20.
Yeah.
And then we started thinking, okay, these are pretty complicated talks.
Yeah.
We've got 90 days to come up with a solution. Where do you think we stand in 90 days?
Look, I'm going to tell you, I think the likely outcome is that they make enough progress in 90 days, and actual progress. If you look at the Chinese, they are actually allowing some companies to buy into industries. They're talking about making actual immediate changes when they had their press release, both about buying things and changing. They acknowledge that IP is an issue and try to set up a process to try to make, fix IP. So if they do that, my guess is at the end of 90 days, it'll get extended more. They can't get it all done in 90 days. I think it's just too complicated to do that. But again, it creates another of a cliff. You have to wait for 90 days to see what that means. And so that kind of uncertainty is just not necessarily good for markets. I'm hoping it works. I hope these important issues get resolved.
You're hoping. Are you expecting that they will?
Again, this is all about odds. I give it a higher chance, 60% versus 40.
60% chance that there is a resolution.
But the risk is always that something goes south. We arrested the lady from Huawei, and what does that mean? And the rumors now, I heard a rumor that they arrested some Americans in China, and that kind of stuff is just not helpful.
If you looked at the situation with the Huawei CFO, I was reading through it this morning too and trying to figure it out. I mean, it was done by the Southern District in New York, by the Department of Justice.
Yeah.
To me, it didn't seem like there was a direct correlation with what was happening with the trade talks. But
there is a good chance the White House had no idea what was taking place. I mean, governments are big and complex places, so that does happen sometimes.
Right, and if that's the case, is the market overreacting?
It's possible, yeah.
You haven't heard anything one way or another?
I've been busy all day, so you've probably heard more.
Yeah, just reading the tea leaves on what...
I don't know.
Yeah. I want to talk to you about the Fed, because you did mention the Fed raising rates at this point. And that's been a huge part of the factor that has made, I would say, probably business leaders, but especially traders, pretty nervous, is the Fed raising too far, too fast. This morning, the market was betting that there's only a 73% chance that they even go this month in December. And up to this point, that had been kind of 100% baked in. What do you think? Should they, based on what you see in the economy, because you have a pretty long lead?
I think when you talk about the risk of the Fed doing it too much, too fast, there's also a risk of doing too little, too slow. And, of course, it's easy for people who own assets to say it's all about lower rates, but the fact is a strong economy, normalizing rates is a good thing. So, my guess is the Fed's going to be looking at data right up to the last minute, and that they probably will do December. I don't think the Fed should be overreacting because the stock market went up or down, or people are afraid of trade, or stuff like that, or possible geopolitical events. And normalize is a good thing. The world will be much happier if America's growing and rates are going up a little bit than if we have a recession and rates go down. It's better for the world. So I think they'll probably stay on course, and of course people are going to adjust their speculation on that issue. So,
I mean, you have a very good idea of what's happening in home mortgages because of all the mortgages you make there, and in car loans. And that's been some of the areas that people say, look, things are really weakening there. Is that because rates going up, or is there something else happening?
I don't think, it's not weakening. Car loans are being made, 17 million cars being sold. It's humming along. I think a bunch of people have gotten a little more conservative in subprime auto. That's a very minor total effect on the United States economy. And home mortgages, mostly because rates are going up, and that the option adjusted spreads and mortgages are going up a little bit, so it's a little more expensive to get a home. If I was the government, I would go out of my way to expand the credit box. Right now, we still have restricted credit to a lot of buyers because of all the mortgage origination, securitization, purchasing rules and stuff like that. And that could be fixed and doesn't create any extra risk. It just reduces the cost of mortgages to a bunch of people, and it opens up more people get mortgages.
What has to happen for that? Who would have to sign off on that?
We need securitization requirements. Okay, we still don't have them 7 years after the crisis. That alone, so you're allowed to securitize and get some of the stuff off your balance sheet in a very, very safe way. That would be great for the mortgage market, reduce the cost of all mortgages.
You say securitization, and everybody immediately thinks, oh my gosh, we're going back to CDOs, well, of course, and all the things that cause the problem.
That's not the way people should think. There's good and bad. There are good CLOs and bad CLOs. There's good this. It's a bad idea to think that securitization is a bad thing. It's a very good thing. And remember, the buyers are top-notch professionals too, so it just allows institutions to make mortgages to have another way to sell them, a cheaper way, and it makes it cheaper for the individual. And the credit box is more, with all the litigation after the crisis and FHA and all those things, what happened is a lot of banks and non-banks, they don't go right up to the limit of Fannie Mae and Freddie Mac. They put overlays, a little more tighter appraisals, a little more conservative appraisal, a little more conservative income, and that hurts lower income and that homes valued between $200,000 and $350,000, and that would be a good thing to make those mortgages more available. So there's always a solution to issues, and but obviously rates going up reduces mortgages. But in American history, there have been a lot of times when mortgage rates are going up, home prices continue to modestly go up, and the economy continues to grow. It's not automatic that just because mortgages are going up that's going to hurt.
There are people looking for bubbles everywhere, inflated asset classes, because of the reason that rates have been so low for so long. And one piece that investors have been nervous about recently is just corporate credit. Are there problems with the corporate credit market?
No. I think people are... The corporate credit market in 2007, the underwritten bridge book on the street, $480 billion. Today, 80. There are no SIVs, no bad CLOs, no bad CDOs, no subprime to speak of in a whole bunch of categories, much less leverage in the banking system and the non-bank system. And then you're looking at leverage loans. Yeah, they're leverage loans. That's a normal way to conduct business. People buy companies with leverage. But the banks own, which is $800 billion or something of Term A loans, is pretty safe. The Term B loans are predominantly owned by non-banks, but they look to be okay too. There is more of it. I think if you looked at a bubble anywhere, it would be in government bonds. Where rates have been suppressed now for the better part of 8 years, and that's the other side. That you don't want to find out that we're starting to have inflation and we have to sell. And this year, the United States has to sell $1.8 trillion of bonds between the government of $1.2 trillion and the Federal Reserve so far plans to sell 600. That's a huge difference from a couple of years ago. And so that's the supply and demand is different. So I wouldn't be a buyer of government bonds at these prices. I honestly believe the 10-year should already be at 4%. And nor do I think it was at 4%. It would be a disaster if the American economy is growing at 2.5 or 3.
You know, you can say that it's being artificially held down, but you could also say, look, if you compare that to the German tenure, that's going to act as gravity on U.S. tenure rates too. I mean, how much of this is?
Look, first of all, countries have different growth rates and different currency curves and stuff like that. Just because they're different doesn't mean that one does the other. But in this particular case, I think it's mostly right. But that's also because the ECB is buying bonds.
Right.
Okay. So when I say suppressed, I mean globally suppressed,
right.
not just suppressed in the U.S.
Yeah.
Can we talk a little bit about what goes on out
yes,
here?
Let's do that.
What we should all be optimistic about?
Yes, let's switch to that. And let's start with the jobs report. It's coming out tomorrow.
Yeah.
You announced an initiative at JPMorgan today to take $6 million and spend it on job training here in the D.C. area.
Yeah.
It's something you've been doing around the country and even around the globe.
Yeah.
Why? What are you seeing in terms of demand for these jobs, and what are you seeing in terms of?
So take a big picture: 3.7% unemployment on its way down, 7 million open jobs, 7 million people looking for jobs. Okay, more open jobs per person than we've ever had in the United States of America. So this, what we're doing here at JPMorgan, is a microcosm of what we're doing around the world, and it's a microcosm of what the BRT is doing. So what I'm about to say is happening everywhere. So these business leaders, there's 200 CEOs, and most companies do this, by the way, at the ground level, are doing kind of what we're doing here. So here, it's $6 million over 3 to 5 years to help high school kids get certifications such they can get the technology jobs which are right here. Okay, with Amazon coming and people like us expanding, a lot of companies expanding, their jobs are here, the people need training, and that's what it is. And we do this in Detroit, in Indianapolis, and San Francisco, and there's a booklet which you can get of all the BRT companies, of the 100 different things we do, and now the BRT is doing what I call 11 test kitchens. We're going to 11 cities. We have a bunch of the big companies, a bunch of the mayors and stuff having organized saying, what can we do to accelerate jobs? It could be apprenticeships, internships, high school, community college, college. It could be anything like that that gets kids well-paying, great jobs. And this will work. It's got to be done by government and business. It can't be done by government alone, and it can't be done against government. So businesses need the help of government and vice versa. So
and what do you need from government?
And here it's all about high tech.
Yeah.
So a lot of the jobs around the world will be fairly high tech related jobs.
What do you need from government? I understand that it's hard to do it without the corporations jumping in because you need to tell them exactly what you need.
Here's an apprenticeship program that works in Denver. It comes out of Switzerland. It works in Canada. That high school kids, 30% go to college, 70% go to jobs. And that because you go to a job doesn't mean you can't go into college afterwards, but an apprenticeship. So in 10th grade, you spend a day a week there. In 11th grade, you spend 2 days a week there. In 12th grade, you spend 3 days a week there. You get paid while you're there, and you get credit for what you learn. Because learning how to operate machine tools or computer stuff, you get credit. When you get out, you already have a well-paying job because the local business helped train you. And so what does this school have to do? Teach the teachers, allow very quick certifications. We can't go through 6 years of getting something like that certified. Get local business working there. And there are a lot of government programs that have money that can help get these things accelerated around the country. And America used to be great at this, and we've become terrible.
What happened? Why?
And I'll give you another one, which is part of this innovation thing is innovation is infrastructure. So what have we done in America? We put a man on the moon in 8 years, which did two things: unbelievable capability in R&D, and now 12 years to get the permits to build the bridge. How did this nation of ours become so bureaucratic? And of course, having 12 years to build a bridge means the extra cost and uncertainty. And what happens if you reduce that to 4 years, which they do in Canada, by the way? Right. You assume we could be as good as Canada and something like that. And then innovation. So the internet, the health services, the moon program, huge innovation around it. So our R&D, like 15 years ago, was 4 times China. Today it's equal to China. Okay, and so we need, and these companies do the R&D. So you look at R&D and capital expenditures, large companies, take the 2,000 or 3,000 large companies, they're like 70 or 80% of it.
Right. And
the American public should know that is what drives jobs and productivity and growth. Is those huge capital expenditures, the huge R&D. Here you have Boeing's drones and AI around and driverless cars, and this is going to be unbelievable for America going forward. And this is the BRT trying to make a real effort to try to improve society. Okay.
Do you feel like you have a willing partner in the government right now? Are they listening? Do they hear what you say?
Yeah, I think you have to. The administration, yes, because they want to get infrastructure done, work skills jobs done. They want to be, the guidelines for businesses, to have competitive tax systems, which is equally important for innovation in the long run, by the way. And then when you go around the country, another very important point, some of the stuff we see is really bad is state and local. You know, just almost like this endless corruption to get certificates of occupation or permits to build something or something like that. So, you know, one of the things that all of us do is we work with local governments. So some of them are fabulous. I mean, outstanding. Detroit, Mayor Duggan. Okay, New Orleans with Mayor Landrieu. I mean, he's not there anymore, but some are just so political and bureaucratic and backwards, they're not conducive to business. You know, this whole thing with Amazon looking at cities, it kind of brings out the cities, once you become a mayor, you want to attract good jobs. And therefore you need schools, infrastructure, arts, all those things that make it attractive that someone would want to be in your city and stuff like that, a competitive tax system. But if local government is hostile to business, it's not going to happen. So again, once again, the two have to work together to have a successful society.
Is that why you signed up for another year as the chairman of the Business Roundtable?
Yeah. So the BRT does, you know, we do tax and trade and immigration, innovation and infrastructure, and we're trying to get policies it's the one organization that's policies that are good for all of America. And, you know, and it's shared success. It's inclusive capitalism. Because we all know that we get society doing better in education, more people involved, the wages will be shared better across the board, society will be happy, there'll be obviously far more jobs available and well-paying jobs. And so I think something like the BRT, the Chamber of Commerce have to do that. So the CEOs of the BRT have done an exceptional job, a real detailed level. Like today we're rolling out, I think it's in a month we're going to roll out innovation policies, which you'll find really interesting. And I think today we're rolling out privacy policies. You know, the privacy group led by Julie Sweet did an unbelievable job to lay out what we think the principles of privacy should be for data privacy. I think that's unbelievable. I mean, it takes, you know, and that's 40 or 50 companies working together to really think through the issues, and we don't always all start at the same point.
No.
So it takes us a while.
You do it before the regulators do it too. Come up with
and hopefully it'll help inform smart regulation that's great for consumers, that's great for businesses, so who understand the requirements, the compliance, the execution risk of, you know, doing it right or not doing it right.
Jamie, I want to go back to something you said earlier. I don't know if it was this week or last week. You made some comments just about what you see in terms of a recession being out there. And the way it was reported was that you could see a recession potentially happening in 2020. I think you said maybe 2020, maybe 2021. Yeah. Do you actually see that, or is it just beyond, as far as you see, there's nothing?
I don't know. I mean, you guys always ask that question, and no one knows, and I think it's actually almost a waste of time to guess. Well, I was simply saying that there are a lot of things happening that may even come together the wrong way in late 2020 and 2021. It's possible, you know, we've had, and this is another very important thing, 20% growth over 10 years. It should have been 40%. That anemic growth is part of the reason you have lower capital expenditures, that we didn't create enough high-paying jobs, that people didn't have enough opportunity. And it's like, not the tail end of the cycle, but it's possible this acceleration we're seeing is traditional for the last third of a cycle. So it's possible we've got 3 years left. Right. And, you know, with more jobs and more wages, and you still capital expenditures are still up, by the way.
I was going to ask you about that, because there are different reports in different places.
But people are not looking at the facts. Yeah. They're still up year over year. They were up more in the first quarter, in the second quarter, the third quarter. But a lot of these companies, and the real thing about tax reform wasn't what's the immediate effect. Right. We knew there's an immediate effect. Some people raised wages, some announced plans, some opened another factory or two. But the real effect is the cumulative retention of capital redeployed in productive uses in the United States for the rest of our lives. That's the real effect. And there are foreign officials I meet with now all the time. You know what they say?
What?
You've made it much tougher for us to compete with American companies, because they understand now that someone who will build a plant here or build a company here or put the research, when before they definitely would have put it somewhere else. Okay, and the notion that somehow having uncompetitive taxes is good for our country is a crazy notion. And I know people hear me say that. I'd love them to call me up, because I don't understand how they think it's a good idea to have returns half. I mean, remember, the world was at 40% and we were at 40. They came down to an average OECD 20. Right. We stayed at 40. Right. Okay, all that means that your average returns were twice as good if you had an opportunity to put a plant or a company overseas sometimes. Why do you want to create that environment? You know, and then obviously on the individual side, you can do things different. You know, the Business Roundtable supports the earned income tax credit. Right. So I want to get more income into lower paid people. Right. Most of the CEOs do. They support a huge amount of sustainability. You know, Mark Sutton, International Paper, showed us today all the things all these companies are doing in a video, which now I gather 2 million people watched, with the CEOs speaking about all the wonderful things their companies are doing. JPMorgan will be itself 100% green in like 2 or 3 years. You know, and so these are good things. I think the American public should know about them. And I think Steve Burke should put all what we're talking about here on NBC Morning News and NBC Nightly News, so we educate the American public about why a good business is really good for the country.